Katrina Brittingham, Dr. The Real Deal Love, Edward Johnson. Sit back and relax while we give you advice and tips on business matters and matters of the heart for busy executives. And now, Katrina and Edward. Hello. This is Katrina Brittingham, your navigator on your road to success. All right, we're here for another episode of High Tea with me, and I have my handsome co-host, Dr. The Real Deal Love.
Thank you. How are you, Miss Katrina?
I am well. How are you doing today?
Doing fabulously well. As we just was talking in the green room, the Eagles are doing well.
Yes, yes, my Eagles,
so,
my
so,
Eagles.
so, 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 my introductory now is this. I said, Doctor, the real deal love. From the city of brotherly love and sisterly affection, home of the Super Bowl champions.
That's right, 2023.
Yes, indeedy. Yes, indeedy. Get excited.
I have to say, I called it. I said the Birds are going to the Super Bowl this year, and I should have bet my engineer because he doubted me. I was like, I would have been up a little couple,
Yeah, yeah.
some dollars.
Some dollars up,
That's
20, a
right.
100, you know what I'm saying? You'd
That's right.
increase.
That's right. Um, but we are going down to business. It is the new year. Yes, it is. It is a new season. Guess what? We have the Super Bowl. Guess what comes around Super Bowl time for small businesses and individuals?
Mm-hmm.
Taxes.
Tax time. Tax time.
So get yourself prepared, celebrate the Super Bowl, whatever team you're rooting for. Of course, we know who I'm rooting for. And
Yes.
whether your team wins or loses, we still have to deal with taxes. So it
Yes.
doesn't matter who teams go to the Super Bowl, taxes still come around this year. So
Still
we
taxes.
want to be wise and smart as business professionals and get savviness when it comes to our taxes. And one of the biggest things that we have to think about are our deductions. What can we deduct?
Mm-hmm.
When you do your deductions, it decreases the amount of taxes that you have to pay on the income that
Mm-hmm.
comes in your business. Now, the way you do that and what you can deduct will be determined by your organization, whether you are a C corp, an S corp, a partnership, or an LLC. There are different rules that govern that. But we're going to go through some of the costs that you can deduct as a small business owner, even as a larger organization. Okay.
Mm-hmm.
This is for profit only. We're not doing nonprofit. Okay.
Okay.
Startup and organizational costs are the first ones. So if you just started a business in 2022, you can pretty much amortize, not necessarily deduct, but it's still, you get that money back on your taxes. So it's considered a capital expense. A capital expense is the funds that you will spend within your fiscal year, okay, to help run your business, okay? So the money has not actually left your business. So this is why it is considered a capital expense and not something that you can deduct out. Okay. Deductions for capital expenses typically occur over several years. So when you go on your taxes, if you're doing it by yourself, or even if you go to a tax professional, it's good to know these things so you can make sure that they are applying it right. All right. So it's typical, like if you have deducted a car for expenses, well, we'll go through that where you amortize the payments over the course of several years until you go down to zero. Okay, so amortize means that you take, it's a small percentage that you can take each year until you reach up that cost.
Mm-hmm.
Okay. You can get more information on this by reviewing the IRS publication 535, which covers your business expense information. It's very important that you know this. I tell people, again, even whether you have a, maybe because I'm just like that, whether you have a financial advisor or an accountant or something like that, it's not that I don't trust them. I just want to make sure that I know, number one, because I know that what to give them. Number two, I know if it was done correctly. And only because at the end of the day, whether you have a financial planner or not, if the IRS comes and they audit you or they do that, they come for you, not the person who filed it. And I think that's some of the misnomer that people have. Oh, I have a safety net because I had a financial person come. Because if you look at things, even with personal taxes and business taxes, you have people who have gotten in trouble with their taxes that wasn't paid correctly or paid at all, and they will say that they did not know because they trusted their financial advisor. When it comes to the IRS, when it comes to the government, they really don't care. They want their money. And so
Mm,
you will see in certain situations where you'll have people who actually either have to pay a whole lot, and if they can't, they may actually go to prison for their taxes. Okay. So regardless of whether you have a financial planner, a financial advisor, an accountant, a CPA, it is good for you to know what the rules are, what the laws are, and so that you can just do your due diligence and double check just to make sure.
mm, yeah.
All right.
You know, I was thinking as you were talking,
Mm-hmm.
a couple of things happened, early on in business for me. A good accountant or a good tax person will actually start training you in the process. When they're doing your taxes, my accountant, was training me on, when you file your quarterly returns, your projected incomes, what taxes you have to pay. My main question was, as a business owner, it's like, what can we deduct? You know what I'm saying? What can we deduct? We want to deduct what are all the deductions. And I was so gun ho on, deducting, deducting, deducting. As a business owner, you want to also remember that your income tax, your statements also will be used for purchasing cars, purchasing your credit,
Mm-hmm.
purchasing things. So I was so heavy on deducting so much, and I didn't show enough profit, what I'm saying,
Mm-hmm.
on the other end to be considered for the financing of, cars or houses, whatever you're doing. So you want to start when it comes down to taxes, you want to start structuring, what I'm saying. If you're early in business, you do want to understand there is a loss first 5, 6, there is a loss in business. But then you want to start saying, do I really want to just kind of like be heavy on? I just want to deduct everything, and
Mm-hmm.
not put yourself in the proper light so that
Mm-hmm.
you can also take a salary out of the business and have all the credentials and the requirements necessary to be considered to finance the purchases that you want to finance.
Absolutely. Absolutely. And that is true. That is definitely true. You want to make sure that um you are showing revenue and you're showing growth in your business. So you want to be careful in your deductions. One of the things, like he said, a good accountant will let you know that. Also, if you use certain programs, like I love TurboTax, which actually attaches to QuickBooks,
Hmm.
and everything like that, where you'll get your income statements, your balance sheets, and stuff. But one of the things that they'll say, they'll ask you for certain things, just like when we talked about amortizing your startup expenses. You have the choice to take the whole thing at one time or amortize it. Amortizing it helps you because you're taking little by little. So if you do have any profit or anything like that, it will show up.
Hmm.
So there are different ways that you structure your deduction. Some you can amortize and some you can take the whole thing. So you want to be wise in that. And we're going to go into some of the ones that you may want to um, be a little more careful with so you can show your profit. Um, and like Dr. Love said, even come in and bring yourself in a profit, knowing, and this is what I tell people, it's a big thing because people think that they go into business and all of a sudden they're going to be um, what's his name? The Facebook guy, um,
Mark Zuckerberg.
Zuckerberg. But
Yeah.
what people fail to realize, and the funny part about it is he had a movie that came out. It took a long time. Like Zuckerberg was not an overnight success,
Right.
like people try to play him out to be. He was in college. He actually flunked out of college while he was doing that. He put in a lot of time, a lot of effort, a lot of sleepless nights. It took years for the platform to even come up. Once it came up, then yeah, it blew up. But it took a lot of work. They
Took a
spent a
while.
lot of money. They actually almost went bankrupt before they went to market
Hmm.
because of the expense. And Zuckerberg knew the software, but he did not know the business side. His business partner actually knew the business side.
Hmm.
So, you can have the great idea. You can be great at software. You can be great at other things, but you have to know the business side. You have to know the tax side, and everything like that. So, yeah, people really didn't know before Facebook even became a thing. They were almost done and done for before they started because of the business side, because of the what it took to finance the business, because of taxes, because of certain things. So this is one of the reasons why we have this, so that okay, and if you need a little extra help, that's what the coaching comes in to play. And is no shame to get help because no one knows everything.
Hmm.
That's why companies have VPs and they have sales reps and they have marketing reps, because no one person has it all.
Hmm.
Okay. So the second thing that you can deduct are inventories that you may have, if you have inventory that you use like for products. So some inventory based businesses will manufacture process products or purchase them for resale. Okay, so that means you buy it wholesale, you resell it. Okay, if this is your business model, you can deduct the cost of your inventory or the cost of the goods you sell. So that's the cost of goods sold on your balance sheet. Okay, you generally must value inventory at the beginning and the end of the tax year to determine your cost of goods sold. Okay, the following types of expenses that go into figuring the cost of goods sold is the cost of the products or raw materials, including the freight or packaging, storage of the products, direct labor costs, including contributions to any pensions or annuity plans if you have any of that for your workers who produce the products, and your factory overhead. Okay. Again, you don't want to be heavy handed with that because you want to make sure that you are showing the profit. Okay. It is also a good way to track how much inventory you have on hand, because
Hmm.
if you have too much inventory, that's going to eat into your profits because it's going to add up to the cost of the goods that are sold. All
Hmm.
right. It's going to make that number higher.
Hmm.
Okay. So that's another thing you need to be monitoring. It takes time. If you're like, dang, wait a minute, the cost of goods sold is this amount. Am I holding too much inventory?
Yeah. That's something that a lot of people don't realize is that there's a cost connected to holding inventory.
Mm-hmm.
You know what I'm saying? There's a cost when you hold inventory. There's a cost of holding inventory, and that's the reason uh, the internet sales really took off because you were able to not house and hold inventory. Okay, so when you can start a business where you don't have to hold and have money tied up in inventory, okay, your operating costs are so much less. So that's the reason, when it comes down to the brick and mortar business that just went under, Lane Bryant's, what was that, Foot Locker, because you didn't have to have all these sneakers sitting in the store.
Mhm.
You know what I mean? You could just order it and ship it out. So just know that cost, inventory
And
cost.
what he's referring to is drop shipping. It's
Hmm.
not necessarily the people who make candles in their house. And so the drop shipping actually cuts your cost of storage and things like that, because the actual wholesaler is the one that stores it, and they're the ones that ship it to the locations that you specify. So if you are someone who you're making jewelry out of your house, you still have to consider the cost of goods sold, because you have
Hmm.
actually not only the finished product but the materials to make it. So those are the things that you want to consider. But
Hmm.
he's right. That's why e-commerce um, blew up, because places like Amazon, because I know they're one of the ones that do it. Um, um, I can't think of the other big one. They actually hold the inventory for you, and
Hmm.
when you're ready to buy it, or sell it to someone else, then you can put the order in, and you don't have to have boxes of things sitting up in your home. So he's
Hmm.
absolutely correct with that. But I just had to distinguish the two
Hmm.
for the purpose of this, because it's still two different, and you still do have people who have their home shops where they're making and producing things,
Hmm. Hmm.
and you still have to consider the cost of goods sold. And even when you're doing drop shipping, you still have to consider that. You just don't have the storage and the packaging fees, but you
Hmm.
still have to do that. And I say that because when I actually, even with us with books, when you have books in your home, that's part of the cost of goods sold. If you have a stack of books, how much did it cost for me to get these books in? um how much does it cost if I'm storing it in my home versus somewhere else?
Hmm.
The travel time to get it to a book show, all of those things add up in there. And that's something even I didn't know until I became an author. And I had to start deducting that stuff. And the IRS started asking certain questions.
Hmm.
So depending on what you're doing and what you're shipping, what you're selling, it may vary. All right. So then we have utilities. How many people knew that you could deduct your utilities or a certain
Yes.
portion thereof?
Hmm.
This was big for me. It was like, oh yay, um, get some of that money back. So
Hmm.
any utilities that you use specifically for your business are fully deductible, not even partial, are
Hmm.
fully deductible. Remember what you use for the business.
Right.
Okay.
Water, gas, electricity, you know what I'm saying? For the business, all tax deductible.
Trash, telephone. See, Dr. Love right on the money. See, he's been in this. So it's like, so if you have a phone that's specifically for your business,
Hmm.
like a phone line specifically for your business,
A
that is
business
used
line.
for
Hmm.
your business, yes. Even if you have a cell phone that's used specifically for your business, that is fully deductible. All right. Any trash that's specifically for your business, like if you are at your work time and you have uh, not many people even have paper anymore. When I first started out, I did resume writing, so that was a lot of paper. Um, that cost is deductible. But if, say, you're in your office and you're having lunch, and you have a trash bag there, and if you have a service that you use for your trash, that portion of that, not your whole house, and everything like that, you can deduct. Okay.
And don't forget about some of the fund deductions that you just mentioned. If you're taking lunch and taking someone to
Wait,
lunch and
we're coming to that.
okay.
He always be jumping ahead, y'all. He always be jumping ahead.
Forgive me.
But yes, he's right, and we're going to come back to that. I just had to
Okay.
stop because we're going to come back to that. All
Okay.
right. Um. So we talked about, even like I said, he jumped ahead, the landline use. or cell phone use specifically for your business. So it has to be a business line that you are not using after you clock off of work. Okay.
Personal. Mm-hmm.
Insurance. We talked about insurance 2 weeks ago. Insurance that you take out on a business, the cost of your business owner's health insurance, if you have health insurance through your business, and the business owner's policies are all 100% deductible. And you do want to take these. Okay. We did discuss being careful about how much you take, but you do want to take 100% of these. If you're taking 100% of these should not impact your profit. So you want to be able to deduct your health insurance and your business only policies 100%.
Mm-hmm.
Okay. Other types of insurance policies may include liability coverage, malpractice insurance, if you're in the medical profession, workers' compensation costs, auto insurance, if you have a car that you use primarily for business. I have to stress that this cannot be your car
Personal, your
that
personal
you're
car.
driving little Johnny to soccer
Mm-hmm.
practice in, and that's what you mainly use it for. No, this has to be mainly for your business. Okay.
Mm-hmm.
I believe it's like 80% of it has to be used for your business and
Mm-hmm.
20% can be used for personal, something like that.
Mm-hmm. Mm-hmm.
But those laws change too. So you have to make sure that you know each year how much of the time that you're spending
Mm-hmm.
using your car for business versus personal. And because if you show them how much mileage you put in, because you have to put in your mileage for business and personal, the IRS will come right on in and say, that's not deductible. So
Mm-hmm. Yeah.
so you really do have to be careful and mindful.
And it helps because you got the gas too. Don't forget about the gas. You know what I'm
That's the
saying?
mileage. That's when they do the
Yeah.
car, that's what they're calling about for your car. That's the mileage that you're putting on it.
Mm-hmm.
And so that's what they're tracking, the mileage you're using for business versus the mileage you're using for personal. The
Mm-hmm.
personal is not deductible, but the business is.
Business is.
So you're absolutely correct with that. Yes. Um, Business interruption insurance. So that's like if something happens and you can't do business for a certain amount of time. Most people who get this normally are people who are in areas where you have a lot of natural things like hurricanes, heavy rains and floods, earthquakes, things like that. Just in case something happens and you can't do business for a while.
Mm-hmm.
This is actually not very common for small businesses, which is why when we hit COVID, because if um, people had this, a lot of small businesses, they may have been able to survive some time,
Mm-hmm.
without having their doors open. But as we saw how many people panicked, um, a lot of people didn't have it because this insurance tends to be pricey. So um, again, we're naming these insurances. Make sure that for whatever insurance you have is the one that's right for your business and you can afford that policy.
Mm-hmm.
Okay. So you may also qualify for a business tax credit of 50% for a qualified employer health reimbursement arrangement if you're a small business, which means that your people go out and they get health insurance and you reimburse them for half of that premium. Okay. So number 5 is your business property rent. If you rent your business property, you can deduct your lease or rental payments from taxes. Okay. If you run your business from home, you can also run an eligibility test with the IRS to see if you're entitled to any deductions. Types of deductible home business expenses include mortgage interest, insurance, utilities, repair, and depreciation. Okay. So I did find out it may not be on the federal level, but on the state level, depending on the state that you're in, your rent may be deductible if you have a set aside workspace for business. I had to check that because I was a
Mhm.
homeowner for a long time. And I was
Mhm.
like, dang, I'm gonna miss out on my my
Mhm.
deductions. Well, you might not be able to do it at the federal level, but at the state level, they might allow you to do so.
Mhm.
So that's something to keep in mind. All right. So we talked about the auto expenses. For you have to have, a record of your business usage to keep track of the miles that Dr. Love brought up.
Mhm.
And you can rely on the IRS standard mileage rate, which is currently 58 cents per mile, which has changed since last year. I believe it was like 55 or something like that. If you use your car for both business and personal expenses, we talked about that. You must divide your expenses based on the actual mileage that you are using for your business versus personal.
Mhm.
Okay. So you would refer to publication 463 on the travel, entertainment, gift, and car expenses information. Okay. So under travel, entertainment, gift, and car expenses, we're going to go in because I'm going to skip down because we are running out of time. I wanted to go with the food um, and entertainment. So, when entertaining clients with meals and events, this too can be deducted if necessary to your business. Note most meals costs are only deductible up to 50%. Okay. But certain types of meals, such as a meal provided at an office party, are deductible 100%. Okay. Be sure to save your receipts and note the business purpose of the meal to maximize your deductions. Okay. Because I
Mhm.
wanted to get into that simply because I had some people that every time they went out, they were like, oh, this is a business expense. And they were
Mhm.
writing on there. It is a business expense if you're having a business lunch with a client or a potential client.
Mhm.
How you track that, you write on there business expense, but on the back, you're writing what that expense was. Taking out potential client, discussing such, because the IRS will ask for those things. How do
Mhm.
I know? They did ask me one year, and I have a little pouch where I keep my receipts, and
Mhm.
I was able to. They wanted to upload it; it's electronic. I had to scan it and send it to them, and they were like, "Okay," because I get. At one point, I was traveling a lot. I was doing a lot of business, and I guess they were like, "All of these are not business expenses, but they
Mhm.
were, and it
Mhm.
saved me." Um, so you
Yeah.
want to make sure that you are putting that. Those
Yeah.
also too, I was not putting them at 100% for the meal. It was
Mhm.
50% of that bill when you're going out, say, to a restaurant. But when
Mhm.
I had an event like a conference or I was in an office and I had to provide a whole spread for multiple people, that
Mhm.
is 100% covered.
Mhm.
Okay.
Or if you have a meeting and you're providing refreshments in the meeting for your business, you know what I'm saying?
But that's the
That's
same thing. If you're in the
yeah,
office and it's a
in the
meeting
office.
setting
Yeah,
versus going to a
a
restaurant.
venue of some kind. Yes, yeah,
Yes. Yes.
and for business owners, it's always receipts, 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 receipts.
Oh, yes.
Keep
Oh, yes.
your
Because they're going
receipts
to ask you for it.
for everything so that you can document it just in case. Okay.
Mm-hmm. Mm-hmm. And that goes into travel. If you are frequently on the go, as I was at that time, and in the year that they asked for this stuff, you can deduct your travel expenses. For a business expense to qualify as travel, it must be away from the city or area in which you conduct business. You must be away from your tax home for longer than a full work day. That's important. Okay. Types of deductible travel expenses include airfare, tolls, taxis, and lodging. So you have to be away for a full day, work day. So it can't be, oh, I went here for an hour, I'm going to deduct that. No, you cannot deduct that. Most of the travel that I did actually definitely was out of my city because I was going to other states
Mhm.
across the country. And then when you do that, those expenses are covered. Your lodging, your hotel is deductible. Any tolls, if you um, took a cab as opposed to renting a car, if you rent a car, some of that is deductible. But if you take Uber, now I'm not going to even say taxi because do taxis even exist anymore?
Mhm.
But I'm serious, I don't see them anymore. It's always Uber.
We still got a few out there.
So Uber or Lyft, those things are there, and lodging. And again, you can deduct some of your meals, but again, it's 50% if you at a restaurant. Again, if you're putting on something at the office, and you have to be careful too, because at the office you have to be buying the lunch for the event. Not that you had lunch and you're deducting it. No, you have to actually be the person who is supplying the lunch, who's actually paying that bill.
Hmm.
Okay, that's important. So they just have to put that out there.
Hmm.
Um, if you're in a meeting or if you went to a conference or something like that, um, and the company, another company paid for it, you cannot deduct that expense because you didn't pay for it.
Hmm.
The company paid for it.
Hmm.
So you want to make sure that you do that. All right. So we are at the top of the hour. For any other questions, you can go to the different publications that I mentioned. Ask your tax professional. If you want to speak with me, I can go through some other things. I can even refer you to some skilled financial professionals. Yes, I do have a degree in accounting and finance, and everything. So I can help you. I do have some knowledge of, I can't say some knowledge, I do have knowledge of this. Um, so if you want to
Hmm.
talk to me, but if you want to be referred to a um, CPA or someone else that, just does this on a regular basis, and everything like that, and their full expertise, that's all they do all day and day and out is taxes, then I can refer you to someone who does that as well. Do we have any final um, messages from our Dr. Love?
Well, I think you covered excellent points. It's just excellent just for business owners to know those things that they have to do. I was thinking I work with a company and they're paid, for me to travel. So if your company's doing well, where you're sending people to do business, that's also a deduction because you're sending them to do business on behalf of your company.
Mm-hmm.
So just know that that's also a deductible, but that's down the road where your company's doing well enough where you're not traveling, you're sending people
Right.
to handle business for you. So that's just a great place to be. So great show, great information. As Miss Katrina said, she's a good sounding board for the start of your business to give you all the tax information that you need to do. And if you do want to get a CPA, she can also recommend it, but you would be remiss if you didn't at least get first level, and she would be the first level.
Yes. And I have to say this because you brought it up and it always comes to my mind. Um, when people bring this up, if your company is sending you, it's not deductible for you.
Mm,
Because some people are like, oh, my company sent me here, I can
yeah,
deduct it. No, you cannot. Your company can deduct it,
it's
but
company.
you
Yes,
cannot deduct
you.
that and on your taxes and things like that. If you're flying out. Um, the only thing that you may, as an employee, be able to deduct is if your company does not reimburse for travel.
Hmm.
There is something there where you can deduct those expenses if the company does not provide it. But if the company provides it, you cannot. One of
Hmm.
the things too, when we talked about the phone, if your phone is paid by a company, because we do have people who start up that are still working, if your company that you work for, aside from your business, you cannot deduct your phone expenses if it's paid for by someone else.
Hmm.
So, because I want to make sure that people do not get in trouble during the tax season, because
Mhm.
just like you're following your taxes, so is that business. And if your name is showing up on their roster and yours, they're going to reach out to both of you and
Mhm.
they're going to ask for receipts. And guess what? Whoever has the receipts are the ones who own that. So you just want to make sure that you are um, good with that. Um, Even if you are seasoned and you're not just a startup and you have some financial questions, you can talk to me as well, because I do help people get things in order who may not have had things right, or maybe they were in transition from financial staff. That happens as well. So thank you so much for joining us tonight. We appreciate you so very much. We are not going to see you until after Valentine's Day, I believe. Let me see. When is Valentine's Day? That's a shame. That means I
The
don't have a
fourth,
Valentine.
the
Um,
14th. The
so we will see. We will not
Monday.
see you because this is the Monday before
Yes.
Valentine's Day. See, I need some love. Um,
He's closer than you think. Take it from
Oh,
Dr.
yes, he
Love.
is. I believe that. I really do. But I don't know if he's going to be here in time for things for Valentine's Day.
Okay.
So it is what it is. I'm still
Yeah.
happy. I'm still loved and everything like that. So don't feel bad for me. I'm really not
What
going
what
through
what
anything.
well, we're songsters at heart, so you know what the song says. I don't care how you get here, when you get here, just get here when you can.
Oh goodness. Um
You'll still take him the day after Valentine's Day, right?
Oh, definitely. Especially if he goes through that list that you gave us last week. But I would be remiss, but happy Valentine's Day. I know there are some people who are not getting had somebody for Valentine's Day, or someone that's telling you that they love you. I love you. I always say that around the holidays because I always want to be mindful. People are at different stages. Someone could have had the love of their life and life happened and things like that. We're all at different stages, but know that Katrina loves you, Dr. Love loves you, and we're sending that love to you on today. And we will see you next time.
Bye for now.
Thank you for joining us for another episode of High Tea with Me. To be a sponsor or a guest, contact us at info@ventureready.com.